Welcome back to the channel, or welcome to the channel if it happens to be your very first time here. My name is Troy, and in this series, I plan to show that anyone can create a growing source of completely passive income. If this is the first time you're hearing of this series and you want to know what it's all about, I'm going to link episode 1 above my head so you can go back and watch that and get an understanding of what I'm trying to accomplish with this series. In that first episode, I explain all things such as why I picked the stocks I picked, how much and how often I'm going to be investing, and the overall goals of this portfolio. Once you're caught up there, feel free to watch the other episodes in order so you can see the natural progression of this portfolio, or you can just come back to this episode to see where we're currently at. With that being said, if you're already caught up and you're here for your bi-weekly update, let's get to it. In today's video, we're going to go over where we left off at the end of last episode. Then I'm going to show you the buys completed on February 21st of 2025 in this account, which will feed into the changes to the cost basis of these positions and where the portfolio currently sits after 58 weeks invested. After that, we'll get to see which holdings are the best and worst performers in the portfolio, a season by season breakdown of the progress since we're over 1 year invested, and a chart to show if we're trending in the right direction or not. And to close out the episode, we'll dive into the super juicy stuff like who paid me since last episode, how much they paid me, how we're looking in 2025 income, see when we're expecting a bonus investment into this portfolio thanks to that passive income, and what cash is headed our way in future episodes. Now, since it's been 2 weeks since the last episode, let me quickly show you where we left off. All right, and look in here, this is where the portfolio was left off before the most recent set of buys completed this past Friday. Remember, we had a goal of $145 per holding. The previous account balance was sitting at $1,822.01, and this portfolio was in the green by $65.32, or up 3.76%. So now let's go ahead and look at what buys were just completed in this portfolio with this right here. As I said in previous episodes, $60 is automatically added into this account on a bi-weekly basis to simulate someone adding money each time they get paid. Then that $60 is supposed to be split evenly 12 ways, aka $5 in each stock, but as you can see, Fidelity does as Fidelity wants to do, and this is what we get. So now with these new buys, let's see how much, if at all, the cost basis of the positions were impacted with this right here. Look in here, you'll be able to see all the positions that make up this account, followed by the split adjusted cost basis of each position when I began this portfolio, what the cost basis was at the conclusion of last episode, where the new cost basis sits after the buys I just showed you were completed, and finally, the math is all done for us, showing the difference between last episode and this episode. In total, the most recent buys lowered the cost basis, the green fields, in 7 positions, meaning it increased the cost basis, you guessed it, the red fields, in the other 5 positions. The biggest decrease in cost basis goes to Humana, that went from $321.51 per share to $318.95 per share, while the biggest increase in cost basis goes to MasterCard, that went from $478.71 per share to $480.87 per share. Now that we went into detail on what changed since last episode, let's go ahead and zoom out and see where the portfolio is currently sitting with this right here. So right here is the up-to-date information on this portfolio to reflect our most recent buys completed on Friday, February 21st, 2025, after 58 weeks invested. With this episode, we want each of the 12 positions to be as close to that $150 mark as possible, and with that being said, we have a new account balance of $1,842.70. Now, let me add another screenshot right here with a little bit more information, which will feed into what we'll be talking about next. So this is pretty much the same screenshot we were just looking at, but it has the gain and loss information here at the end. I'm not going to read all this information to you guys, so if there's anything you did want to dive into more, feel free to pause the video here if you want more time to do that. The things I did want to outline here are the best performing position in this portfolio, which is AVGO or Broadcom, which is up $59.15 or 39.57%. The worst performing position, which is HUM or Humana, that's down $29.51 or 19.77%. And that overall, this portfolio is hanging on in the green by $24.76 or 1.38%, despite a few pretty rough weeks in the market. Previously, in past episodes, the next chart I would share would be the projected annualized return chart, but I recently received a suggestion from my loyal subscriber, Beer Review, to break it down by season, so let's check that out right here. I think it was in last episode I was telling you guys that I was trying to work on a way to get this from a suggestion in the comments section to end the video, but be useful to look at. And beer review, I'm not sure if this is what you had in mind, but it's version 1, so let me know what you think. Quickly looking at what this chart is showing. Season 1 is for all the episodes that make up the first year this portfolio existed. Season 2 is for year 2, and so on as we continue to work on this portfolio. The information here on Season 1 is going to be where the portfolio sat on its quote-unquote birthday, for lack of a better term, and for Season 2, it'll be where the portfolio is currently sitting at the time of recording until the portfolio hits its next birthday. Again, if there's any suggestions from Beer Review or anyone else on how we can make this chart even better, let me know in the comments down below. Now, I didn't want to completely get rid of my past chart, so in the last episode, I debuted its replacement, which does a really good job of showing the ebbs and flows of this portfolio, and more importantly, if it's trending in the right direction. So let's quickly look at that right here. As you can see, despite the first 6 or so episodes being exclusively up and to the right, the rest of the time this portfolio has been around has been up and down, to say the least. From being up by over $120 around episode 24 to being in the red at least 4 separate times, there will always be ups and downs that we need to endure as investors, and that's where understanding your risk tolerance and being a long-term investor comes in. By simply understanding that I have time to let this portfolio grow, believing in the companies I pick, and adding a simple trend line, I can see that the longer I stick it out and let the market do what the market does, I'll be just fine. Now, to close out the episode, let's make a mad dash towards the passive income side of this portfolio by first seeing who paid me since the last episode with this right here. So as I foreshadowed in last episode, closing out February was going to be kind of lame in that we're only expecting one more payment to close out the month. That payment came on Valentine's Day from AbbVie that paid out a very impressive, for this portfolio anyway, $1.25. To show that dividend and how it's grown for me over time, let's look at this chart to see the first time AbbVie paid me was last May in the amount of 31 cents. Then we moved to last August where they paid me 59 cents. Moving to last November, it was up to 88 cents. And here we are now in February at that $1.25. In total, AbbVie has now paid me $3.03, which comes out to 16.89% of the total dividends paid in this account. Speaking of the total dividends paid, let's go ahead and add this number to my tracker and see where that puts our total at for February and where we are so far in 2025 with this right here. So with that $1.25 from AbbVie added in, that brings our February total up to $1.54, which is 2,980% higher than this time last year, giving us a Q1 total of $10.70, which is 5,844.4% higher than all of Q1 in 2024, and we still have the rest of February and all of March to really pile it on. Down here towards the bottom, you can see that $10.70 total I just talked about, but down here, that's being compared to all of the income received in 2024, and you can see that we're already up 47.8% higher than all of 2024, and we aren't even done with February yet. I've said this in videos in the past, but I think it's super important when you first get started in dividend investing. In the beginning of your dividend journey, focus on the percentages you're growing your portfolio by while the dollar amounts are small, and over time, as the percentages start to get smaller and smaller, you'll start to see the motivation coming in the form of bigger and bigger dollar amounts to steal the show. Now, I have another little project that I was working on that I can't wait to show you guys right here. A few episodes back, I received yet another comment suggestion, this one from my main man Lee Pickle, who wants to see at the current pace, how long would it take me to make a bonus investment? For those of you who might be late to the party and have no clue what a bonus investment is, allow me to quickly explain. In this portfolio, I'm not dripping the dividends because I want to keep all the positions as even as possible. So instead, I'm letting all the dividends go into the cash position of the portfolio until I get a full $60, at which point I will do a bonus $5 investment into each of the 12 stocks. Well, as curious minds would want to know next, exactly how long will it take to get said bonus investment? So I came up with this simple chart. Sadly, based on all the current numbers in this portfolio, it looks like I will not get the $60 in cash balance until January 22nd of 2027. Now, before you fall out of your chair in disappointment or laughter or both, let me explain why I'm excited by that information. That projection is only based on today's numbers and does not include any new money added, dividend raises, or interest received in the account that whole time, which all three will happen. What I'll be doing going forward in this series is sharing the same graph, but adding 2 more columns to detail where the old projection was, where it is on the episode that we're currently doing, and how many days were shaved off, which will be really fun to track. Again, Lee Pickle, I'm not sure if this is what you had in mind, so if you or anyone else has any suggestions to make this better, let let me know in the comments down below. And now, to close out the video, let's go ahead and see what else we can expect to close out February and what is coming down the line for March with these right here. So quickly looking at February, you might be wondering why I'm even showing this to you since it looks pretty blank for the rest of the month. Well, that's because the interest that I'll be getting from the cash in the account working towards that bonus investment will be paying out on February 28th, probably somewhere around 10 cents or so, which will only add to our February and 2025 total. Then we turn the page to March, which currently has us getting a payment from 4 different companies, one per week as I planned for, and bringing in another month over $1 in passive income. Be sure to come back in 2 weeks as we close out February and begin the last month of quarter one. But that's going to wrap it up for this bi-weekly update to the Anyone Can Invest portfolio. If you guys enjoy this series, please let me know that by leaving a like on the video. And if you have any questions, comments, or concerns, leave those in the comments down below. And if you guys want to see or happen to miss the 2 videos I put out that go over every single investment in the wife and I's investment portfolio that all began just like this, you can check that out right here. But until next time, see ya.